Bank has made a bold prediction about the future of gold prices. They foresee a significant surge in the price of gold, potentially reaching $3,000 per ounce by 2025. This bullish outlook is based on a confluence of factors that are expected to drive up demand for the precious metal. Investors and market watchers are taking note of this prediction, as it suggests a potential shift in the investment landscape. Gold, often considered a safe haven asset, could experience a resurgence in popularity. The current global economic climate is marked by uncertainty and volatility. Inflationary pressures persist, and geopolitical tensions remain elevated. These factors contribute to a sense of unease among investors, who are increasingly seeking out safe haven assets to protect their wealth. Gold, with its historical track record of value preservation, has always been a popular choice during times of economic turbulence. As a tangible asset with intrinsic value, gold offers a sense of security that is particularly appealing in uncertain times. Goldman Sachs' prediction should not be taken lightly. The investment bank has a long history of accurate market analysis and forecasting. Their bullish outlook on gold is based on a thorough assessment of the global economic landscape. While no prediction is foolproof, Goldman Sachs' track record lends credibility to their assessment. Investors would be wise to consider the factors driving this prediction and evaluate how gold might fit into their own portfolios. This prediction has generated considerable buzz in the financial world. It has sparked discussions among investors about the potential role of gold in their portfolios. Some view it as a confirmation of their existing investment strategy, while others are considering increasing their exposure to gold. Only time will tell how accurate Goldman Sachs' prediction will prove to be. However, it has undoubtedly focused attention on the yellow metal as a potential safe haven asset in the years to come. Drivers of the surge: inflation, geopolitics, and central banks. Several key factors underpin Goldman Sachs' optimistic outlook for gold. Persistent inflation is eroding the purchasing power of fiat currencies, making gold more attractive as a store of value. When inflation rises, the prices of goods and services increase and the purchasing power of a currency declines. This is where gold comes in. Gold has historically maintained its value over time, even during periods of high inflation. Geopolitical tensions, such as the ongoing conflict in Ukraine, are fueling uncertainty and driving investors towards safe haven assets like gold. During times of geopolitical uncertainty, investors tend to flock to safe haven assets. These are assets that are expected to retain or increase in value during periods of market turbulence. Gold is considered a classic safe haven asset. Central banks around the world are diversifying their reserves by increasing their gold holdings, further boosting demand. This trend of central bank gold buying is another bullish signal for the precious metal. Central banks, particularly in emerging markets, have been steadily increasing their gold reserves. This diversification away from the US dollar is driven by concerns about geopolitical risks and the stability of the global financial system. These factors combined create a perfect storm that is likely to propel gold prices higher. The current geopolitical and economic landscape is creating a favorable environment for gold. The combination of inflationary pressures, geopolitical uncertainty, and central bank buying is supporting gold prices. This confluence of factors suggests that the upward trend in gold prices is likely to continue. Reaching for new heights, a potential $3,150 price point. Goldman Sachs' base case scenario predicts gold reaching $3,000 per ounce by 2025. However, in a more optimistic scenario, they envision the price climbing even higher, potentially reaching $3,150. This optimistic outlook is contingent on a few key factors. One such factor is the trajectory of inflation. If inflation remains stickier than anticipated, central banks might be forced to reverse their monetary tightening policies sooner than expected. This could lead to a weaker dollar and further bolster gold prices. Gold prices are often inversely correlated with the strength of the US dollar. Another factor is the persistence of geopolitical risks. A prolonged conflict in Ukraine or escalating tensions in other parts of the world could further heighten demand for safe haven assets. This would likely benefit gold, driving its price even higher. It's important to note that these are just projections, and the actual price of gold in 2025 could be higher or lower depending on how these factors unfold. Forecasting commodity prices is inherently complex and subject to numerous variables. However, Goldman Sachs' optimistic scenario highlights the significant upside potential for gold in the coming years. The possibility of gold reaching these price levels has significant implications for investors. It suggests that gold could be a highly rewarding investment over the next few years. Investors who are considering adding gold to their portfolios should carefully weigh the potential risks and rewards. Gold, a safe haven in uncertain times. Gold has long been regarded as a safe haven asset, a reputation earned through centuries of preserving wealth during times of economic and political turmoil. Unlike fiat currencies, which are subject to inflation and manipulation, gold has intrinsic value. It is a tangible asset that cannot be printed or devalued by governments. In today's uncertain economic climate, characterized by inflation, geopolitical instability, and market volatility, gold's safe haven status is more relevant than ever. Investors are increasingly turning to gold as a hedge against these uncertainties, seeking to preserve their wealth and protect their portfolios from potential downturns. Goldman Sachs' bullish outlook on gold prices reflects this growing demand for safe haven assets. As investors seek shelter from the storms of economic uncertainty, gold is poised to shine brightly. The yellow metal, with its long history of resilience and value preservation, is well positioned to play a crucial role in